whether it was tight or loose was in part determined by things like this, the screaming price of Bitcoin. I don't think those were his words, but I mean, and for Bitcoin to be mentioned in an article about Fed policy, I mean, that's kind of an Overton window shift, right? So everyone's becoming aware of this thing, and so yeah, I mean, the Gladwell model says as long as it takes you to go from 0 to 15 or 10%, it'll take the same amount of time to go from 10 to 90, and so we're 16 years in.
Hey guys, welcome back to Everyday Finance. In this video, Larry Lepard discusses Bitcoin and crypto. The significant drop in trust in the US government, which has fallen from a post-World War II peak of 70 to 80% to below 20% today, highlights the inefficiencies inherent in outdated bureaucratic frameworks amidst a swiftly changing global economic landscape. Lawrence Lepard, an experienced investor and proponent of Bitcoin, associates this decline in trust with the increasing attractiveness of decentralized financial systems, especially Bitcoin. He posits that Bitcoin signifies not merely a potential investment, but also a transformative change in our understanding of currency and governance structures. Lepard emphasizes Bitcoin's remarkable performance, detailing instances of investors who acquired the asset at $10,000 per coin and have subsequently realized substantial gains. These gains highlight the transformative potential of the digital currency. He anticipates that Bitcoin may attain a valuation of $1 million per coin in the near future, influenced by its limited supply, rising adoption rates, and a growing skepticism towards fiat currencies and conventional financial systems. From a financial perspective, Bitcoin's attractiveness stems from its distinct value proposition as a decentralized, inflation-resistant asset. In the context of increasing inflation, escalating government debt, and uncertainties surrounding monetary policy, Bitcoin's limited supply, capped at 21 million coins, and decentralized characteristics position it as a compelling hedge against these economic challenges. The recent uptick in institutional interest in Bitcoin is noteworthy, as prominent entities such as MicroStrategy and Tesla have begun to integrate it into their balance sheets, indicating a trend towards increased mainstream acceptance. Nonetheless, the potential of Bitcoin faces several challenges. The ongoing volatility, heightened regulatory scrutiny, and significant energy consumption continue to be critical issues of concern. In light of the associated risks, Lepard and other advocates perceive Bitcoin as a fundamental element of an emerging financial framework, one that reduces dependence on centralized entities while emphasizing transparency, security, and personal financial autonomy. For investors, the long-term trajectory of Bitcoin presents a mix of potential opportunities and inherent risks. Implementing diversification in a portfolio, coupled with meticulous risk management, is crucial for effectively addressing price volatility. Furthermore, it is essential to comprehend the macroeconomic factors, including inflation trends and central bank policies, that impact Bitcoin's valuation. And lots of things Larry Lepard discusses, so please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
Well, I think that's exactly right. It's the point in time. I mean, Saylor says this. He said he thinks the next 10 years are going to be a digital gold rush for Bitcoin. I think he's right. I mean, we've broken through. I mean, I remember 17. I got involved in 14. I bought a few of them, not many. I bought more in 17. I bought on the dip after that twice, doubled down twice. But 18, 19, it was still pretty fringe, and we had just come through the block size wars, and there'd been forks earlier, and so on and so forth. And then 20, it worked. We took off with all the money printing because it responded to that and as a sound form of money. But then, the tightening brought it all back down, and SBF blew us up. But it's now there's now almost nobody that's not aware of its existence. I mean, here's a perfect example. This morning I was reading the Wall Street Journal. Nick Timiraos was speaking about Fed policy, and he talked about how whether it was tight or loose was in part determined by things like this, the screaming price of Bitcoin. I don't think those were his words, but I mean, and for Bitcoin to be mentioned in an article about Fed policy, I mean, that's kind of an Overton window shift, right? So everyone's becoming aware of this thing, and so yeah, I mean, the Gladwell model says as long as it takes you to go from 0 to 15 or 10%, it'll take the same amount of time to go from 10 to 90. And so we're 16 years in, and these adoption curves, they do get steep. And I've seen the same curve for mobile phones, computers, PC. I mean, almost every development. I mean, washing machines, and automobiles. Any new invention, and it tends to get started, and people start using it, the early adopters. But then when it becomes pretty obvious that, oh, this is a good thing and we want this, and I think that's what's happening now. I mean, most people now, well, there's nobody in Bitcoin now that's bought it in the last 15 years. It's not in a profit condition, so it's working. Even if you bought at the peak, pre SBF, you paid 60 or 70, and we were as recently as 107. So it's starting to work, and that's just going to attract more people. So, and I think the word is spreading, and people are coming to understand what it is. The FUD around energy and the FUD around Sam Bankman-Fried, those are getting explained away, and I try and deal with those in the book. I mean, if you look at what this book is, I want this book to be the perfect book for orange pilling anybody. I mean, Lynn's book is better. Safe's book is better. Jeff Booth's book is better. But what this is, and in fact, I didn't really even write this book. I just pulled together the brilliant ideas of a lot of other people and put them into, and I think what I'm pretty good at doing is kind of explaining complicated things in a simple way. And so I just pulled all these different ideas together and put them into a narrative, and then told my own personal story to make it somewhat funny and interesting.
Bitcoin is set for significant appreciation in the next few years, with projections from certain analysts indicating a price target as high as $249,000 by 2025. A report from CryptoQuant indicates that this positive perspective is supported by the anticipated arrival of $520 billion in new capital, influenced by advantageous political, regulatory, and economic factors, especially under a U.S. administration that favors Bitcoin. The realized market cap of Bitcoin, which assesses the circulating supply according to the price at which coins last transacted, underpins the projection of a substantial rally. Should historical trends continue, we could anticipate that capital inflow may elevate Bitcoin's price to a minimum of $145,000 by year-end, thereby establishing a basis for reaching the $249,000 target by 2025. The growing trend of institutional adoption, coupled with clearer regulatory frameworks and favorable monetary policies, is expected to bolster Bitcoin's attractiveness as a hedge against inflation and a viable alternative store of value. The forthcoming administration's favorable stance towards cryptocurrency may lead to the removal of existing constraints, including those that restrict access to crypto banking, potentially paving the way for new avenues of growth. Samson Mow, CEO of Jan3, forecasts that Bitcoin may witness extraordinary daily price surges, with the potential to increase by $100,000 in a single day during times of significant market volatility. This observation suggests that Bitcoin's current price dynamics are akin to a beach ball held underwater, indicating a potential for significant upward movement once these limitations are removed. The current global economic environment, characterized by increasing inflation, a decrease in the value of fiat currencies, and the accommodative policies of central banks, presents a favorable scenario for the expansion of Bitcoin. In the current market environment, where investors are gravitating towards safe haven assets, Bitcoin's limited supply and decentralized characteristics make it an attractive option for capital allocation. Analyzing Bitcoin's trajectory underscores the significance of diversification and strategic allocation in investment strategies. The growth potential is substantial. However, the inherent volatility and vulnerability to external influences, including macroeconomic shocks and regulatory shifts, necessitate thorough analysis. While there is a trend towards enhanced regulatory clarity, unforeseen policy shifts or enforcement measures have the potential to create volatility in the market. The price of Bitcoin exhibits significant volatility, closely tied to market sentiment that can change swiftly in response to external factors. Competing digital assets, especially those that provide enhanced utility or scalability, have the potential to undermine Bitcoin's market leadership. The capped supply of 21 million Bitcoin, alongside the increasing participation from both institutional and retail investors, highlights its viability as a sustainable store of value over the long term. The projected price levels present a strategic opportunity for investors to leverage what is widely perceived as a pivotal moment in the evolution of digital assets. Nevertheless, effective risk management and a comprehensive grasp of market dynamics are crucial for successfully navigating its intrinsic volatility. Let's get back to Larry Lepard interview.
Such that, somebody could pick this thing up and go, "Oh, I get it. I think this guy's right," and maybe I should pay attention to this, because everybody, most human beings, they care about their future, they care about their children's future, and they if they have savings, they know that what they do with those savings will determine the quality of that future, and so this is a book aimed right squarely at that subject, and showing how the system is set up to rob them of their savings, and yet they've got a really great tool that they can fight back with that will then allow them to actually conquer and beat the system. And by the way, as we all conquer and beat it, we can fix it so that all that theft stops. So it's a good thing. It's a very good positive thing.
Well, I am super excited for this to drop. And
well, me too. I mean, I got to tell you, I'll just tell everybody who's listening, getting this thing formatted and processed and through Amazon, it's a nightmare. The big book publishers are just they were going to take 6 months to publish it, a year to publish it. I was like, no, that's not going to work. I want this thing to get out now. So as a result of that choice, I had to go to Amazon. We go to Amazon, and it's clunky.
XRP has recorded a significant 12% increase in price, now standing at $283, a threshold that has not been observed since early 2018. The observed growth can be attributed to significant accumulation by large investors and heightened speculation regarding the potential listing of an XRP-based exchange-traded fund, ETF, in the United States. Data from crypto analytics firm Santiment indicates that wallets containing between 1 million and 10 million XRP tokens have amassed over 1.43 billion XRP since November 2024, reflecting a 37.4% increase. This significant accumulation indicates an increasing level of confidence among high net worth individuals and institutional investors. The rally occurs amid a landscape of heightened uncertainty within the cryptocurrency market, yet it is supported by positive sentiment regarding the expected pro-crypto policies of President-elect Donald Trump. Experts indicate that an improved regulatory landscape with the new administration may provide substantial advantages for Ripple and XRP. Sen Dawson, head of research at DVE, emphasize the opportunity for an XRP ETF to catalyze additional inflows into the asset. With the increasing popularity of Bitcoin ETFs, there is potential for investors to shift their capital towards altcoins such as XRP, potentially enhancing its upward trajectory. In a similar vein, blockchain influencer David Ginn praised the steadfastness of XRP holders, contributing to the increasing bullish sentiment in the market. XRP has exhibited a pattern of price consolidation in 2024, alongside persistent legal challenges with the SEC, maintaining its prominence in market discussions. There is a prevailing belief among analysts that a favorable stance towards cryptocurrency within the White House may impact upcoming regulatory decisions, which could lead to a resolution of Ripple's legal ambiguities in a positive direction. There is an increasing trend of institutional interest in XRP, as JP Morgan anticipates that XRP exchange-traded products may surpass Ethereum ETFs in performance during their early trading phases. The projected influx of net new assets for these products ranges from $4 billion to $8 billion, which will further reinforce XRP's market standing. Analyzing the investment landscape, XRP's path indicates considerable potential, especially with the attainment of legal clarity and regulatory endorsement for an ETF. Nevertheless, there are inherent risks such as ongoing legal disputes, fluctuations in the market, and competitive pressures from alternative cryptocurrencies. It is essential for investors to keep a close eye on significant developments, such as regulatory updates and the increasing integration of XRP within financial systems to ensure they are making well-informed decisions. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.